The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter.
Ourselves
Kate Stalter.
Trending markets. Good morning. It is Thursday.
Looks like we got ourselves some more downtrending markets. Good morning. It is Thursday. There's always a trade somewhere in one direction or the other. And of course, I was listening a bit to Steve's show there prior to coming on here. It's great. One of the fun things that I really enjoy about TFNN is just hearing so many of the other hosts with strategies that I just sit here and nod and say yes, that really does jive with what I'm looking at here. If you recall, a few weeks ago we had Larry call in on my show, and he was talking about using a lot of caution in the current market, which, of course, is something I say constantly on here. Steve was talking about the need in certain cases to get into cash. And, that's something that's interesting, because I talk to a lot of advisors, a lot of professional money managers.
And to be fair, a lot of
there is, of course, there's the buy and hold crowd.
That is a viable strategy.
And to be fair, a lot of them are looking to get some yield in a downturn, and that is a viable strategy if it's executed right, and a lot of people are able to do that. But in other cases, there are very few, not too many, but you get a handful of asset managers who do say that cash is a viable strategy. That's a place to keep your money when we are in some kind of choppy market or some kind of market downturn. I mean, right now in the past few months, other than a few pockets where the trend has been clear, and sometimes that's been for weeks, sometimes only for days. But it has been very, very difficult for any trend to take hold. So in certain areas where you are looking at where to put your money, in some situations, if you're not going to be able to or can't, just due to whatever circumstances, can't be watching the market all day, or at least not actively enough, then cash absolutely is a terrific alternative. I know that on here, Ken Shreve talks about that on his show. That's certainly something where he and I, and if you listen to Tom's guest, Ken Hoover, who was on his show frequently, all of us were trained in the methodology of getting into cash. Certainly is shorting an option in some cases, absolutely. In certain market conditions, not all of them, clearly, when you look at the rates these days, but there have been times a few years ago when treasuries were a viable option. So it just depends on what's going on at any given time. In other words, what I'm just trying to say here is this idea of long only all the time, and I still know quite a few retail investors who are sticking to, who really believe that's the strategy. I think that's something that was pretty much not. I was about to say it was probably taught in the mainstream media.
However,
perhaps people who read the papers back in the 60s and 70s, maybe 80s. However, I think I'm going to amend that statement. I think it's still being taught today. Actually, when you watch some of the financial media.
How to play
and you get
the jobs report.
Some of these segments that are titled what to trade now, how to play the jobs report, looking for I'm just making this stuff up, but it's kind of funny, how to play the jobs report. You can bet somebody will have a segment on that today, or maybe even if they're late to the party tomorrow, and they'll have some ideas for some longs probably, and I'm willing to bet potentially. Most of them would probably not be very good ideas. But, you never know. There could be something to trade in there potentially. I think I just don't like that phrase, how to play such and such. It sounds a little bit irresponsible to me, even though I do trade, and I'm not some kind of buy and hold investor, but I just don't like the term play. I just never have. It sounds a little gambling like. Okay. For me, maybe it's just semantics, but in any case, I've never really liked that phrase, but you see it out there quite a bit. Okay, as you may notice, if you're on Tiger TV, I've got a new chart program I'm using today. It's the high growth stock charting. And I was actually turned on to this in a presentation I saw from Gil Morales and Chris Catcher. A number of you are aware of those guys, so I noticed they were using this. I kind of like this here. It's I'm going to fiddle with it a little bit more in the coming days, and hopefully by next week I'll have this perfected a bit for you. We're looking here at the short Russell 2000 RWM, showing some nice gains today. Let's take a look. Let's cruise over here to the Russell 2000 ETF, the IWM. So you see the inverse, as you would expect. Some losses on there today. Now, while I was getting ready for the show, I was kind of noticing this program does not seem to have Facebook on here. I can't get the Facebook chart up here, so I've got to monkey with this a little bit more. But how about just for fun, I'll try to, we'll put up another recent social media IPO. We'll put up a daily chart of LinkedIn. Now, the reason that I was going to talk a little bit about Facebook, and I couldn't care less what the stock is doing right now. I have no idea. I haven't actually even looked at it today. I know a lot of people are still talking about it. But what I thought was more interesting is that the Facebook IPO has effectively, for the time being, killed the IPO market. And that's not really a surprise, I suppose. There have been, apparently there have been several IPOs that were canceled last week or postponed, perhaps not canceled altogether, but postponed. And certainly market conditions also frequently have something to do with that. So I don't think you can perhaps not blame the triumvirate there of Facebook, Morgan Stanley, and the NASDAQ for conspiring to kill off the IPO market. I think that market conditions overall probably had something to do with it. But I think there was quite a bit of anticipation leading up to that Facebook offering that would really clear the way for a lot of enthusiasm about new offerings. Did not work out that way, obviously, and we're seeing quite a few of them have postponed. Now, there's one here,
so this is
Alliance, let me see, Loyalty Alliance, and okay, so this is a Chinese-based company, and they're even going day to day. Now, they had been they filed for their IPO a while ago, so the day to day status for them is really nothing new. They actually filed, let me see here, oh my goodness, back in nearly a year ago, 10 months ago, in July of last year. And this would have been one of those very small and of course the environment for some of these China-based newer companies. And this would have been one of those very small companies, would have been right here in the wheelhouse of what we do here on the Small Cap Roundup. Would have been, they're looking to raise about $35.7 million, priced between $6 and $8 a share. Now, that's as of now. That could obviously change at any time. So that's Loyalty Alliance. They are one of those mobile marketing companies based in China.
The very
I imagine probably just focusing on some of these
does not have a good foothold in. So
mobile advertising, the very thing that everybody is griping about that Facebook does not have a good foothold in. So in any case, not so much happening. So I put the chart of LinkedIn up there, getting a nice boost today. Now LinkedIn, really, you can see here on the daily chart that I have in front of you, you can see it's trended nicely above that 50-day moving average recently. Now this is not a small cap. It pops up on my radar though because I do tend to follow some of these smaller recent IPOs. And I'm taking a look here at LinkedIn and I'm seeing, so there's your 50-day line, is this smaller red line up here that I'm indicating if you're watching Tiger TV, and it is trading below that line. I thought it was trading below that line. Consolidating a bit right now, but this one has been one of the best performers among some of these social media IPOs that have gone public of late. This is a mid-cap market cap of about $10 billion.
Good earnings estimates on this one.
As I mentioned, it's consolidating right now, but that's okay. We are in a downtrending market. Good earnings estimates on this one. Actually expected to almost double earnings to 69 cents a share this year, another 77% expected in 2013. Now, what this one has that Facebook does not, I was just a few minutes ago before I was on the air here, I was listening to somebody talking about the fact that this company does have it. It's about using time, not killing time, something along those lines. Now, he obviously had rehearsed that. It's obviously a planned remark in response to Facebook. But it is interesting because people do use LinkedIn to connect and get jobs. In fact, I do know my nephew-in-law was just here in Santa Fe last week. He got his new job through LinkedIn. He went on LinkedIn, looked at, he initially did some research, found some companies where he wanted to work. Looked for people who knew people at he's an engineer, so he was looking for some startups that might fit for him. He went on LinkedIn. He looked for people who knew people at those companies, and it worked beautifully. It worked absolutely as the company envisions it. He would be a very good case study for that, in fact. So, and people do post their resumes. You have a way to that the company is producing revenue based upon some of these job searches. So absolutely, you can see right away where there is more substance than in Facebook, and it appears that even in a poor economy, hey, people are looking for new jobs, companies are hiring. Despite all the doom and gloom you hear out there about no jobs, nobody's hiring, and it is obviously I'm not thrilled about what I'm seeing in the economy, what I'm seeing, not thrilled about what I see in the policies from our government, but nonetheless, for the people who are out there and who are showing some initiative, companies like LinkedIn definitely can be providing some opportunity for them. So I got some more of today's small cap movers that I want to come back and look at after the break here. We're going to talk about Fresh Market, Jack in the Box, Open Table, a few names that are moving today, small and mid caps. So I'll be right back. I'm Kate Stalter. This is the Small Cap Roundup, 877-927-6648. Give a call.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
All right. Hey, if you were listening to the commercial there during the break, and I'm sure you were.
All right. Hey, if you were listening to the commercial there during the break, and I'm sure you were.
Over a month ago,
they were talking about the Low Price Leaders newsletter. Just launched it a little over a month ago, maybe a couple months ago. So we have out there, let's see, we did take a trade for a profit yesterday. I put in a trailing stop on one of the names, so we did take a profit in one of the names yesterday. And I have a couple trades on right now, and both of which looking pretty good in today's action. So we have, as I mentioned, I guess as I mentioned before the break there, what I'm talking about here is there is always a trade in any market condition. So these days, is there some downside to grab? Absolutely.
At some point,
and will there be some upside to grab eventually? Yeah, we will go into a new bull run at some point, and there are plenty of stocks that are setting up as potential longs, plenty of small caps, low price names. What we do in that particular newsletter, there are two areas that I'm focusing on. The first is low priced. I don't mean penny stocks, okay? We're not ever going to get that risky here. What I'm talking about is stocks trading between $5 and $12. That can be a particularly productive area. When stocks set up in there, they can go on and rally and show very, very big gains. And frequently, you could have a holding time frame sometimes of several months in those. Now, are there junctures at which you may want to pare back your gains, perhaps ahead of earnings reports? Yes, there's going to be some trading in and out of these, but you can always buy the stock again. Bind to pyramid up. I don't average down, but it's definitely a productive strategy in a market that's trending higher to pyramid in. So that's a little bit of what we do in there, the $5 to $12 names. The other part of the low price leaders newsletters ties into what I do here on the show, the Small Cap Roundup. We're looking at stocks with market caps under $2 billion. Now, I realize that by some definitions in some of the indexes, for example, perhaps the Russell or the S&P,
market cap under $3 billion.
600 small cap,
and obviously, of course,
in some of those indexes, you have a market cap under $3 billion at the time of purchase, and obviously, of course, if we do get into a trade where it's under $2 billion and it rallies above that, then we're obviously not going to get out of it just because it goes above $2 billion, okay? I'm talking about at the time of purchase. So that's what we've got in there, and as I mentioned, so that's what I was talking about. We had a trade on yesterday. We were able to book a small profit in a trade yesterday by using a trailing stop. And then today I've got another trade on, actually two trades on. One I put on yesterday when the market was trending lower to capitalize on the downdraft in the market, and still in that one, obviously, as of today. So take a look. You can get information at tfnn.com about how to get a trial, and there was some information there in the commercial. There is an introductory rate that you can absolutely still take advantage of. So, okay, so let's take a look. I put a chart up there for an IPO called the Fresh Market. And let me just go over in here. Let's see. Let me get this. One second. Let me pull up the daily chart that I have. Okay. So you know what? I'm actually on the next break. I'm going to go back to some of my other charts here because this isn't looking quite right. I'm going to put up another chart after the next commercial break because this isn't what we got going on today. Actually, what we have here in the Fresh Market is a gain today, and ignore what's on the screen there if you're watching Tiger TV, up 1.1% today, and a big jump of 14.9% yesterday.
Let's see, they issued an optimistic outlook.
What we have in this particular company, they reported earnings. Let's see, they issued an optimistic outlook. Now these are, if you're listening down there in Florida, you might be, I know we have a lot of listeners in Florida, you might be familiar with this particular company, kind of like a smaller Whole Foods. That's where I've been to the Fresh Market down in Florida. Recent IPO.
Talk about this a little bit more after the break. We'll be right back.
Let me see here. Back in November 2010. I'll talk about this a little bit more after the break. We'll be right back. We'll talk about some of these smaller cap names that are doing well right now. I'm Kate Stalter. This is the Small Cap Roundup. Give us a call, 877-927-6648.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, we have Europe closed to the downside. Awesome ground over there.
All right, we have Europe closed to the downside. I guess lost some ground over there after the quote-unquote disappointing
kind of quote-unquote
American
because all of the
economic data.
Okay,
so
if it misses estimates.
So it's kind of quote unquote disappointing because all of the estimates, basically it's disappointing if it misses estimates. So it's always kind of I realize there's a lot of economists out there we go, with many advanced degrees who build endless models to predict this stuff. How are they so wrong all the time if they're so smart?
Stock charts again.
Yeah, okay. Rhetorical question. Rhetorical question. Okay. Let's see here. What I've done, I put up the stock charts again, because I need to fiddle with the HGS charts a little bit. They are great charts there. They look good. I just don't have all my settings correct, so maybe a little bit not quite ready for prime time today, but I'll have that. I'll have the HGS charts up and running by next week. So I put up stockcharts.com again, and there you can see, I just want to finish up with TFM, the fresh market. This is one, had we been in a bull market, this could be a buy. Now, the fact that it is rallying even today, that is a very good indicator here, showing you some institutional confidence. Now, this is one of these stocks that kind of, by my newsletter definition, it would be really a mid-cap at this juncture. However, according to the S&P, according to Russell, this does fall into the small cap. Either way, it's a recent IPO, went public, as I mentioned before the break, November 2010 at 22 a share, now trading at about 56.79 as of today. So it's kind of funny. I heard somebody on TV this morning talking about LinkedIn, which we were looking at earlier, having a rocky time in 2011, and I was kind of thinking, well, what didn't? Just about everything did, really, and this did too. This is another example of that. Okay, I want to go over to another stock here that I mentioned before the break. Jack in the Box. Okay, now this has not really been such a great performer, and I know producer Al was messaging me there that this particular company, is this still around? Now, if you've been to California lately, you know that this one is still around.
Yeah, they seem to be.
I'm looking at, apparently they have nearly 3,000 locations, but
not that I can really
they seem to be mainly concentrated in California. You don't really see them so much in other parts of the country, not that I can really recall. Now, this one, fundamentally not a great performer. Shown a lot of quarters there of revenue declines, and I guess this time around it was an improvement because it was flat year over year. So I guess that's something to cheer for. Triple-digit earnings gain this time around. A loss expected still for 2012, but actually no, I'm sorry. I apologize. Let me look at this again here. No, an earnings decline. So the company is going to remain profitable. They've had several quarters of earnings declines. Profitability expected in 2012, but let me see, a year-over-year annual earnings decline of 12%. That's expected to reverse in 2013 to a year-over-year earnings growth of 11%.
Things are going to get better here.
So,
the stock higher.
Maybe the institutional owners believing things are going to get better here, sending the stock higher. This is another one that's pretty interesting. We have seen some gains lately. Let's just see what we've got going on here today. It was one of the big NASDAQ gainers yesterday, so it's consolidating today, pulling back. Not unusual as the market itself declines.
As I say often, I do not use fundamentals.
Technically, this could be pretty interesting, and while as I say often, I do not use fundamentals as a means of making a buy or sell decision. Nonetheless, the institutional investors do. We have fund managers on the show frequently. We're going to start doing that again in the next few weeks. In fact, I do have a guest booked for next Tuesday. He's not a fund manager, though, but we do have a number of fund managers that will be coming on the show in the coming weeks. And if you listen to these guys, what are they looking at? Valuations. Now, I've talked quite a bit about how for retail investors, that's very, very often just a fruitless exercise, because while you're obsessed with whether or not a PE ratio is too high, your stock can be going higher. I just get the biggest kick out of people talking about valuations, but you can look at so many of these growth names, and they're rallying regardless of that. So it's, but it is something that the institutions look at. They make their buy and sell decisions based on that. A great example is when you see a stock pull back to, for example, its 50-day moving average. At that point, many of the fund managers will say, "Hey, the valuations are more attractive here." So basically, it provides some type of quantitative, so-called quote-unquote logical excuse for them to get back in the stock. And obviously they're looking at the earnings estimates. They have their own estimates. They believe there is potential. So to bring that back to what we're seeing here in Jack in the Box, perhaps with this earnings growth rate that is seen, that is forecast for 2013, that could be attracting some more institutional money into this name. Okay, so let me show you another one here. Sanderson Farms. We're going to the chickens right now. We're kind of on our little theme with some of the food today, with some of the big NASDAQ movers were Sanderson, Jack in the Box, the Fresh Market. So this is Sanderson Farms, and this is one of those smaller names. And he just pull up the market cap here. This is also working on its second day in a row of gains. Market cap of $1.2 billion. Fairly thin trade. Moves about 198,000 shares a day. Trading at around 55.25 right now. You can see on here on Tiger TV, kind of emerging from a little consolidation right in here. So this is another one of these. There was a time several years ago when this was one of those small growth leaders. Actually, what was happening at the time, that was right around, maybe around, 2005, maybe a little bit sooner than that. There was a time when the Atkins diet and all those low-carb diets were really in the news. And I know they're still very popular, and they work, by the way, just saying. But that was a time when several of those books were being published. That was sort of the diet trend that was in the news. So a lot of these meat producers, egg producers, chicken producers were doing very well in terms of how their stock was performing. So in any case, both the fundamental and the technical performance on this particular company have been erratic in recent years. This one has seen some losses. Had a loss in 2011 of $5.47 a share. Expected to be profitable this year. Expected to grow to the tune of 39% when it comes to earnings in 2013. So, again, here we might have another example of a company that may be attracting some of these small cap managers due to some of these earnings forecasts. And these small cap fund managers, even when they're getting into some obscure stock like a Sanderson Farms, for example, they go out there, they do all this due diligence, and they are looking at all these valuations. Let's see. So, could be what's happening there. So you're seeing some gains. Technically, do I like this one? Yes, it does look pretty good. We'll see if how long that momentum can continue, and what we are seeing in terms of the price momentum when we go back into a market uptrend. Really don't want to be messing with new longs, particularly in some of these more thinly traded equities, at a time when it's just way too easy for a Spanish bank or a Greek politician or who knows what. Could even be the effects of economic policies in the U.S. Who knows? Could drag the market down in a heartbeat. We're still not in any kind of confirmed uptrend. So really still need to be quite careful about going into some of these new longs. Let's take a look at another stock that's pretty interesting. This is Open Table, and let me get the ticker right there. Open, O-P-E-N. And I'm going to put this up on a weekly chart up there on Tiger TV. Now, as you see, this is a real bow wow stock right now. Definitely not one that normally would catch my attention based on my screens. The reason this caught my attention, fundamentally, it's actually doing pretty well. However, it does not really meet any of the technical criteria that I'm looking at. Just cannot really gain any upside traction trading below its key moving averages right now. Let me go back to a daily and take a look at something on Open Table. Now, this is a small company. I mean, the market cap used to be higher, obviously. Right now, it's $909 million. Decent liquidity. Right now, it's got an average trading volume above a million. And let me see here. I think we've had some trade. Obviously, we did see some trade pick up yesterday, so that gave it a boost. This is one of those that kind of was one of those .com darlings a few years ago, and in many of these cases, for some reason, institutions tend to hang in there, regardless of the fact that the others have sold off. So this one still has. Let me just look at some of the data here. More than 300 U.S.-based hedge funds and mutual funds owning shares. In my view, it's kind of hard to say why that is, but again, I think it comes back to what they see as the potential here. We're seeing earnings growth estimates above 20% in each of the next 2 years. Now, what happened here that caused some of that spike in volume yesterday is the company made some kind of further deal with Google and Zagat. It had already been partnered with those, but now this is apparently going to give it even more presence, and it also rolled out a mobile solution in, ready for this, the UK. So I guess maybe actually that looks like that was this morning, and the stock is trading lower today. So it looks like that big UK mobile news did not really have any kind of positive effect there. So this is one. This is a terrific example of one of these names you hear about in the news. I just don't like it. Don't like what I'm seeing here. It's just mired below that 50-day line, and you can see that the 200-day line is the 50-day is below the 200-day. Not looking good here. Now, when we do have a moving average cross, when you do see that 50-day line at some juncture, and I'm sure that'll happen, they're getting closer, actually. The two are getting closer. When you do see that 50-day line cross above the 200, if the price does rise, that could be a bullish indicator for traders who want to get in early. Obviously, you've got a whole lot of overhead here. Let's see if I can get in there. Yeah, okay. There, if you're looking on Tiger TV, you can see all that overhead. We have to regain that prior high, so obviously we're not looking at anything like that at this point. I think I would be looking for a market uptrend. I would be looking for a resumed uptrend in this stock, and I would like to see some moving average crosses where you have your shorter-term moving averages back above your longer-term. Okay. Let's see. Let's take a look at a couple more right here. I've got another minute or so in this segment. Let me show you. ASNA is the ticker. Now, this is a clothing chain. This is Ascena. They own Dress Barn and a couple other companies. I talked about this one a little bit. Now, this is also consolidating below its 50-day. But really, this is a more bullish consolidation. You see it's holding up above that 200-day line.
The mid-cap range.
Now this is one again. We've got some double-digit earnings growth here.
There's other retail names
here. This is actually moving up into the mid-cap range. Market cap close to about $3 billion right now. There's other retail names that I would prefer over this particular one. I've kind of been tracking this, but I really not so crazy about it right now. Not showing the kind of leadership I would like, but that was a big NASDAQ mover yesterday. I'm Kate Stalter. Got one more segment left right here on the Small Cap Roundup. Stick around.
You've heard Basil Chapman on the air hosting the Tiger Technicians Hour and always wondered what's behind his powerful Chapman wave. Well, Basil has just announced a one-day online master trader course where he'll explain his Chapman wave methodology in detail so that you can learn how to chart Basil's one-of-a-kind formation techniques in real time while the market is open. Not only do you get a full-day online master trader course with Basil during live market hours, but by signing up now, you also get a free month of his newsletter, The Opening Call, a $128 value, along with access to his Moving Averages webinar, another $99 value. This online course takes place Friday, June 8th, and will be archived so you can view it as many times as you like for 30 days following the course. Make sure you take advantage of this one-of-a-kind Master Trader course with Basil Chapman during live market hours by visiting the front page of TFNN.com and reserving your spot today. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back. Last segment of today's Small Cap Roundup. Actually, it's the last edition this week for the Small Small Cap Roundup.
Welcome back. Last segment of today's Small Cap Roundup. Actually, it's the last edition this week for the Small Cap Roundup. Just want to remind you, if you didn't listen earlier in the show, if you were just tuned in, check out the homepage, tfnn.com, for a look at the Low Price Leaders newsletter and the introductory rate that we're offering on there.
But also on the
not only are we taking advantage of the longs when there's an opportunity, but also on the downside of the market. So really want to follow the trends. I'm a trend following trader, and that's what I'll be doing in the newsletter. Stocks, low price stocks, priced between $5 and $12, and then stocks above $12 with a market cap of $2 billion or below. So I'm taking a look today at what some of the biggest movers among some of these small caps were, and I'm kind of venturing. I've been venturing a little bit into mid-cap land today as well. Even though it's not what I follow in the newsletter, I do believe the mid-cap universe is also quite productive in terms of stocks that are sometimes among the biggest gainers when we do go into a bull market. So a lot of the mid-cap names as well as small caps to be watching their setups these days. So I put up a chart there of Shutterfly, SFLY, market cap $994 million, definitely a small cap. So this is one of those online photo companies where you can post your photos, print them, share them with your friends, that kind of thing. Now this has. I know a lot of people tend to just use the Yahoo's Flickr service, which is pretty popular. But now you see the chart here for Shutterfly has not really been exemplary lately. This is again not one of these that has popped up on my screens. I was just really taking a look at what some of the price movers were.
What is moving higher
in yesterday's session?
It's just fun to run some of those screens.
Because I'm always curious about what is moving. What is moving higher when the market's declining? So it's just fun to run some of those screens because sometimes you really do get some good ideas. Now in this particular case, what it can show you in a poor performing market is a lot of beaten down stocks that are getting bought potentially off a bottom. Can that eventually be good? Sure, of course. It is the value buyers who set the stage for some of the growth investors and growth traders to get in there and eventually capitalize. But there's just still a whole lot of risk. There's just way too many examples of where people are trying to pick the bottom in a market or in a particular stock. And then just, again, there's another round of panic selling. So what we got here on Shutterfly, apparently some of the news that spurred the move yesterday, they acquired an Israeli photo software firm. So that happened right there. And we're about to wind down on the show today. So I just want to, let me see, I've got one more. I think I have time. I can put in quickly. One, if I type fast, IPHS is the one I want to show you here at the very end. And this company is another small cap. This makes like food additives. So we're back on our food theme here. Market cap of about $1 billion. Kind of trending sideways. You can really see it a little better if I put it up here for you on a weekly chart. You can see a nice little consolidation kind of moving sideways. This is kind of a so-so name. Not really crazy about this one, but could there be a trade in this one at some point? Sure, there could be one to watch.
And I will be with you again next Tuesday.
Thanks for listening, and I'm Kate Stalter. This is the Small Cap Roundup, and I will be with you again next Tuesday.